Welcome to Urban Hood Stock Tips, powered by Urban Food Alliance. This is a financial literacy education program. The following presentation is for educational purposes only. It should not be considered as financial advice. All symbols and trading ideas by the speakers are for demonstration purposes only. This presentation is not an offer or solicitation of any kind in any jurisdiction. Swing or day trading is not for everyone. Option trading carries a high degree of risk and is not suitable for all traders. Investing of any kind involves risk. Your investments are solely your responsibility, and we do not provide personalized investment advice. It is crucial that you conduct your own research. We are sharing our opinions with no guarantee of gains or losses on investments. Please consult your financial advisor prior to making an investment. Please read this disclosure information and understand that there are risks associated with stock trading. Urban Hood is not responsible for any losses you may incur.
I live in Monroe, New Jersey. I've been doing stock trading for a few years. But I'm pretty sure that this learning the options will help me. I've never done options. Some of my friends have done it. I couldn't understand from them, so I wanted to understand the basics, so I'm starting here. And I appreciate your efforts once again. I can't appreciate enough that that's a really good cause. God bless you, and God bless the whole team.
Yeah, hi, this is Sridhar. I've been an old student. I've taken the classes from last time. I found a lot of immense value in these. I have never traded options so far. I have been only trading stocks, and I really want to move into blue chips, but I can't afford the price of the stocks. So I would rather like to go with the options and make sure I am hedged to an extent and apparently don't lose a lot. I mean, I have the habit of that's why I pick lower, small cap, mid cap, and all you see is mostly Red Sea over there versus Tesla. If I had a Tesla stock, I would not be in this class today. So thank you, Mushi, for all the wonderful effort. You, Aziz, Kunal, Dilawar, you guys are like phenomenal. I mean, nobody shares knowledge to that extent, even if they know it, because I guess when it comes to finances, people become little conservative. They don't share. So thank you very much. That's why I'm repeating it too.
This is Prabhu. I'm dialing in from Virginia. I've been trading stock for probably 10 plus years, but I'm always scared of options. I always thought options is for Wall Street traders, and you have to understand the financial market very well. You should know how to read the balance sheet. You should know how to read the annual statement, blah, blah stuff. I'm always scared. But I recently I was just reading some articles. I thought I should give at least a chance to learn. First I have to learn and then try to understand. If it doesn't work, it's okay. At least I should know what it is, rather than just boycotting that it is for traders. So that's why I joined. I happen to be in quite a few WhatsApp groups. I came across this link. I did some of the work you guys are doing. It's wonderful. It's noble. Glad that you guys are doing it. Hopefully I will be able to contribute as well.
Hi there, my name is Krishna Kamkanda. I'm from Chicago, and this is my second class of the day. I've been doing stocks, but I don't have any knowledge of options. I just want to know options because I was talking to my friend, and it said that I lost a lot of money, not a lot, but some money during this COVID, and my friend was talking about the hedging, and then he brought up the things about options. So probably this would give me more education about the whole the options and how to deal with the stocks a little bit safer with more knowledge on it.
Hey, I'm Jairaj, go by Jay. I trade stocks, options, futures, etc. And I'm with this Urban Food Stock Initiative from day one with Mushi. So I help, I participate in training others. I attend most of the calls. So guys, my name is Kunal. I'm going to be teaching this first portion of this options basics class, and I'm from New York City. I've been trading for well over 10, 15 years, and actually, as far as options, I wasn't very well versed in options before I joined UFA, and once I joined UFA, I saw so much activity on options. That's really where all the big traders were making all the money, and UFA is giving out a lot of teaching, a lot of advice, and I really started picking up options once I joined UFA. And here I am several months later, and I'm teaching the course. So I'm kind of testament to what UFA can really do for someone. And I hope a lot of you guys have the same sort of experience where you guys really take what we provide initially and really, soar high and make profits and, give back to the community eventually.
Thank you, Kunal. Thanks. Everyone said they already know who I am, but this is my background. If anybody wants to connect with me, I have my personal website. It's cloudthoughtleader.com. You'll go there, and then there is all the personal link and everything there. So please do connect with me. But here, you're welcome. I'm going to, for the sake of the time, I'm not going to go too much, but at least I do want to make sure that we kind of share the concept. Our concept is just like earlier, all of you know that everybody goes through hardship in life. And then if its root cause is not the money. Money is just like is a tool to get there. So we figured if we can help people to come out, not to worry about food, then what can we do to help them that the people do not have to worry about financial freedom? So think of this in having a house. You're building your own house. You decide how active you want to be that in financially when you do the stock trading. So if we see people say right away, I want all this active income, all this. You do not want to be active right away. You want to think about being passive. As you start developing more confidence, then you become active. So if you build a house, you need a 4 pillar here. Number 1 pillar, you need to have a right environment. Now you heard from Kunal that he's a testament of what we do here. He's a doctor. This is a doctor is not only come learn with us, he's confident enough to share with you. So that environment we create, that sharing and learning from each other environment. Next, pillar is the community where there's too much money out there. Why not you just share with the people how you're making money so others can benefit from it? In a day, $2.5 trillion transaction is happening in the market. There is too much money. So why can't we be part of that piece, right? That's the community minded that, do not be jealous, do not be thinking that so everybody can make money, the abundance for everyone. Third one is the serious investor. If you are really serious that at some point that you are going to be investing your time, you are also you're going to be investing your money, you are also investing your talent, so you keep growing yourself, right? That's it. That's what we mean. We meant serious investors. It's not the money, it's also mindset. Then the final one that you have to stay focused. So at the end of the day, we all have one dream, the vision that, how can we enable everybody so they can make some extra income and become financial free and then do whatever they want to do. Like I am, as I mentioned before, also meant I am retired today. So people say you're too young to be retired, but I work harder than anybody else. When I say anybody else, the people I know. Earlier class, I mentioned that I only slept last night to today 2.5 hours. But I have energy that I can run right now 5 miles, 10 miles. I love running and doing those kind of activities, right? That's what I'm talking to people. I said, look, if you're really passionate about something, time is not, you'll find the time. You'll make time. Time is not something going to come to you. I make time myself to give preference what I love to do. I love to teach you guys. I love to grow. I love to also learn from you. So I'm sure that we'll find the same thing for it.
We're going to be talking about options basics today, right? And before we jump into the world of options, obviously it's a whole new language. There's a lot of terminology. There's a lot of, foreign terms that we don't really know. And we really need to start with defining those, defining the terms, defining really what an option is, right? So that's a good place to start. Let's take a look at what an option exactly is, okay? An option is a contract, plain and simple, okay? An option is a contract where the buyer of the option has the ability to either buy or sell something at a predetermined price by a predetermined date, okay? Already this sounds like a very intimidating, very complicated definition, but I think you guys should give yourself a little more credit because all of you are really familiar with this definition. Having the ability to buy or sell something at a predetermined price by a predetermined date. Let me give you two examples. One example is this coupon over here, this Burger King coupon. This is an example of an option, right? Let's look at the definition one more time. It gives you the ability to buy or sell something at a predetermined price by a predetermined date. So let's look at this Burger King coupon. It allows you to buy these 2 Whopper Jr. sandwiches and 2 small French fries at a certain price, $4.99, by a certain date, right? It's a little tough to see over here, but there's an expiration date. So this is an example, actually, of a call option. It allows you to purchase something at a lower cost than the actual cost, right? At a predetermined price by a predetermined date. The normal value of 2 Whopper Jr. sandwiches and 2 small French fries is like, what, $15 or something like that? But this coupon, this option, allows you to have access to these assets at a lower price, $4.99. So this is like a call option. One more example is car insurance. I know a lot of you are familiar with car insurance. What's the basic premise behind car insurance? To insure your $30,000 vehicle, you're paying a premium. Every year you're paying, for example, $6,000, right? This is actually like a put option. In the case where you have an accident, your car either is totaled and goes to zero or goes to whatever, $10,000 from $30,000, as the asset's value depreciates, your insurance policy will give you the $30,000 back if your car goes to zero. So that's an example of a put option. The asset value depreciates and you get paid the $30,000 for the price of a $6,000 premium. So these are 2 examples of options, right? And that kind of puts into context a little bit this definition that an option is a contract that gives the buyer of the option the ability to buy or sell something at a predetermined price by a predetermined date. Now, when we're talking about the stock market and stock options, right, we're talking really about shares of stock. The underlying asset in the Burger King coupon was these Whoppers and French fries. But when we're talking about stock options, the underlying asset is 100 shares of a stock. And there are 2 types of options. When you purchase an option that gives you the ability to buy something at a certain price by a certain date, it's known as a call contract. When your contract gives you the ability to sell something at a predetermined price by a predetermined date, it's called a put contract, okay? These specific predetermined price and predetermined date, they're known as a strike price and an expiration date. And there's also the price that you pay for the option, just like in the car insurance example. What you're paying for is called your premium, okay? So these are really the gist of the most important terms that everyone needs to really have a grasp on to really understand options. So I wanted to take a look at Thinkorswim TD Ameritrade, which is really the best platform, in my opinion, to trade options and to really get an understanding of all these things. So I'm going to pull up my Thinkorswim account, and it looks a little complicated. Don't get too intimidated. We're just looking at the basics. There's a whole like education module and stuff that you can go through in Thinkorswim to teach you how to use Thinkorswim and such, but that's not one of the aspects of this course. We're just going to look at what these terms look like in real life. So let's look up AMD, for example, okay? If I wanted to trade AMD options, I would just type AMD over here, hit enter, and what you're looking for is the options chain over here, okay? So you open up the options chain, and it's giving you a lot of data here. Right now, what we're concerned with are the basic terminologies. The expiration date, right? This expiration date is May 1st, 2020. These are the different strike prices of calls that you can buy, right? The strike prices are listed over here. The call, this is the call side, and this is the put side. If you wanted to purchase a call for a May 1st expiration date, we're going to go through more examples of these shortly, but if you wanted to purchase a call for expiration date May 1st, 2020 at a strike price of 53, this is going to be your price, okay? $4.65. But I want to also mention to you guys that this price over here is a per share basis price. Remember, when we were talking about options, the underlying asset is 100 shares of a stock, right? But this notation over here is only telling you the per share stock price. So what you really need to do with this number is multiply it by 100. So if we're using this 465, you have to multiply it by 100 to get a total cost of $465 for one contract of this option with a strike price of 53, expiring on May 1st, 2020. You see over here that there are a whole bunch of other expiration dates, right? And this 100 is showing you that it's based on 100 shares of an underlying price. All standard options are based on 100 shares of an underlying stock. Okay. Does anyone have any questions or anything so far? Everyone following so far?
I feel like that was a bit fast, but I'm gonna just keep going with it.
Okay. Tell me what is unclear so far.
Just the last part you were going about saying it's not the exact price. I guess per contract.
Okay. So right here, the price. Okay.
Yes.
This is the price per share. Okay. But an options contract is talking about 100 shares, right?
Okay.
So you're going to need to multiply this number by 100 to get what your true price is going to be for that options contract.
Okay.
Okay.
Okay. Sorry. Thank you.
No, that's all right. I want you guys to chime in if anything is unclear.
I have a question. So that is the price that I pay when I want to make a call, right?
When you want to purchase a call option, yes.
Okay.
Okay.
And the strike price
the strike price is something we're going to get into, but the strike price over here is part of the contract. Okay, the contract allows you to buy something at a predetermined price. That predetermined price is called the strike price.
Okay.
Okay, just like in the Burger King coupon, your strike price is $4.99, right? This coupon allows you to purchase something at a certain price by a certain date. The strike price is $4.99. Expiration date over here is April 19th or something like that.
Okay.
All right. So that's the strike price. The expiration date, I think, is pretty clear, and the amount that you wind up paying for the option is called your premium, just like in the car insurance example. So if you purchase this option right here, your premium would be $530 for one contract of this option. Okay? So you see that this price is called the ask price. Okay? When you're buying something, when you're buying an option, you're always going to pay the ask price. Okay? On this side, you're seeing, yeah, go ahead.
Do you see anybody waiting in the waiting
Let me take a look.
I guess since I made you a host, I don't.
Yes, I see two people. Yes.
Yeah.
Sorry, it's tough to keep an
Yeah.
eye on both at the same time.
Okay, yeah. Well, actually, do me a favor, make me host again. Then
Yeah, one second.
that way I'll pay attention.
Yeah, good.
All right. Okay.
Okay, everything clear up until this point, guys?
Yes.
Okay. So when you're buying something, you're paying the ask price, okay? Let's say this option appreciates in value a little bit, right? When you sell it, you're going to wind up receiving the bid price. So let's say right now, I just bought a call option, this call option, the 52 strike price, May 1st for AMD. I'll pay $530, and if I immediately sold it, I would receive $510 back. A losing proposition, obviously. What happens to the difference? The difference between this $20 basically is going to go to the market maker. This is called the spread, okay? The difference between the ask and the bid prices is called the spread. And when you buy and sell, the difference between the two goes to market makers or whoever basically set up this transaction for you, okay? So I hope this kind of puts into context a little bit what these terms actually look like on an options trading window. Different trading platforms are going to have slightly different variations of, what this looks like, but on the basis, when you're dealing with the very basics, you're looking at the strike price, the expiration date, obviously the ticker symbol, and these are the prices. These are the premiums for the options. Okay.
I have a question now, Kunal.
Sure. Go ahead.
So for the May 1st 52 strike price,
Yes.
Does that mean that I'm predicting that on May 1st, the price of the stock AMD is going to be 52?
It's going to be, well, with a call option, we're going to go over this in a few more slides, but yes, with a call option, the basic premise is you want the stock price to go up, and when you buy 52 strike price, you are saying that the cost of the share is going to be above 52 when you reach expiration. Okay. Right now it's actually 56, so it's already above 52. So whatever you're paying for it right now, you're going to want the share price to be even higher for your option to be worth more money. Does that make more sense?
Yeah.
Okay.
So Kunal, what's the benefit of buying at 52 when its stock price is 56? You get only the premium, right?
So this is something that we're going to go over in a subsequent class. This is actually called purchasing an in-the-money option because the share price is already above the strike price. We'll get into that a little later. Your profit and loss potential on purchasing options of this nature below your current share price is that you have higher profit potential. Okay.
Okay.
That's just a quick answer, but we'll illustrate that more in future classes. Okay.
Okay, sure. Thank you.
All right. So go back to this. So now we're kind of familiar with strike price, expiration date, premium, what an option is, right? Went through a couple of examples over here.
Hey Kunal, if you don't mind, we have I guess few people had a technical difficulty to log in.
Yeah.
So they are in. So if you can quickly just use that your slide 3 and 4 to explain to them, that way hopefully they will be up.
Thanks for watching. Visit our website, urbanhood.org, and join our community at meetup.com and look for financial freedom for you. Thank you, and we hope to see you soon.